Okay, let's get over to a keen student of history, Martin Cobb, Senior Vice President at Lorne Steinberg Wealth Management. Martin, thanks very much indeed for joining us today.
Good morning, Andrew.
There was talk yesterday, people said, well, look back to the 1973 Arab oil embargo. That was murder for the stock market. It caused inflation to rise. Is there any comparison between now and then?
That's a good comparison, and the answer would be no. The energy dependency of the Western economies back in the 1970s was much, much greater in terms of what it is today. And particularly with the US, the US is much more self-sufficient, not totally self-sufficient, but much more self-sufficient in terms of oil production, being the largest producer today. So I wouldn't draw many parallels between what happened in the 1970s twice and what is happening today.
And of course, back then, the Arab nations or the big oil producers united to restrict oil supply, but they don't seem inclined to do anything like that on political grounds anymore.
Yeah, I mean, it's hard for them to do it because there is a surplus of oil today, but we're not in a tight oil market. Maybe getting tighter over the next few weeks. Time will tell how this whole Middle East conflict kind of pans out. But they really don't have the power that they used to have, given the, I guess, increased efficiency of the US on its own, and also just that there's plenty of production in other parts of the world. Brazil, parts of Africa as well now contributing. So we're not in the 1970s. We're not going back there, but there may well still be a period of sustained higher oil prices.
Let's have a look at Canadian natural resources. Maybe you could put up a 10 or 20-year chart. I mean, that stock, we almost need to start using logarithmic charts for some of these companies because this one just going vertical. Record highs today.
Yeah, I'm a mathematician, so I love my logarithmic charts, much more representative than a linear chart. We own Canadian Natural Resources, and we've liked it for a number of reasons. It's capital discipline, first and foremost. It's a low-cost producer. Again, we like that in the tough times. And here we are, results today, looking back the last 3 months of 2025. I mean, the oil price back then, we don't really care about that anymore, do we? It's ancient history. But obviously, they're well-positioned, good production growth. We like what they do in terms of their capital discipline. They will be a major beneficiary of higher oil prices. But even at oil prices in the 60s and 70s, they can generate huge cash flows. And we like the stock for the long term.
Let's switch back to technology. Broadcom, what's your view there? Because there have been worries over some parts of their business, including software. It's so important to them, but their device sales doing just fine, it seems.
Yeah, they're increasingly a hardware company. They used to be much more software. They bought VMware, they owned Symantec, but those businesses are almost at the margin now. The problem I have with Broadcom is, and it's maybe my Templeton days, I kind of, not mean reversion, but I like to understand what a business should earn, through a cycle. And we're definitely in a cycle, although some people suggest there's no such thing as a semiconductor cycle anymore. They're extremely well positioned, and they're making bucket loads of money. But 5 years ago, they made $8 billion of operating profit. This year, they're anticipated to make $88 billion of operating profit. So a lot has changed over the last half decade. And my concern is with their customers. The spend, which we all know is very heightened today, coming from the likes of the hyperscalers, the likes of OpenAI. I just worry that it's just a little bit too much. It's just too positive. And just even a slowdown in that growth rate will lead to pressures on revenues and a drop in margins for the likes of in Broadcom, for the likes of NVIDIA. The risk reward, to me, is just not that attractive.
You like the look of Visa. Now, I know that you're a big reader. I imagine you did at least have a look at that Citrini research piece on Substack warning. It was really a dystopian science fiction article speculating on what might happen when white-collar jobs are slashed across the economy because of AI. They touched on Visa and they said that it could be bypassed by these AI agents simply sending money to each other instead of going through gatekeepers like Visa. But you do think this company has a moat, as they say.
Well, I'll take you back, Andy, to PayPal. Coming along, it was going to undermine Visa or MasterCard, and ultimately it sat on their rails. I mean, Visa is a very, very fancy telecoms network. It's not a financial. They have no credit risk. They have really no relationship, some relationship, but very little relationship with the customer or the merchant. They provide the ability to process a transaction, authorize a transaction in milliseconds, and they can do something like 60,000 transactions a second on their global network. There are always competitors, Stripe and Plaid or others that are basically coming at this market, but they're a very, very, efficient telecoms network. No one is building that. And so unless you can get onto the rails and do something very, very different, it's hard to see how they will be ultimately undermined. We've had these arguments before, as I say, with the likes of PayPal, better, more efficient way of settling, transactions, certainly, but ultimately it's got to be communicated somehow, and Visa and MasterCard are the way to communicate it.
And then, of course, we know that the widespread fraud in cryptocurrencies and the lack of trust in anything you see on the internet right now, people may feel more comfortable with dealing with boring old Visa for the foreseeable
future. That's a really good
future.
point. I mean, yeah, we don't really talk about crypto, but it is just manna from heaven for the money launderers, or the criminal organizations. And whilst you can debate the merits of cryptocurrencies or blockchain, which I think is a really interesting technology, distributed ledgers, etc. The fact is that trust in financial transactions, remains paramount. I do think the whole blockchain technology ability to undermine the custodian bank or the intermediary, I think has some really interesting uses. But ultimately, when I'm sending money, I want to make sure it gets there and is not interfered with on the way.
And just give us your thoughts on Canadian Apartment REIT before we let you go, Martin. This is a stock or a REIT you like the look of?
It's a bit contrarian, isn't it? I mean, you were talking earlier about home prices in Canada. This too shall pass. At the moment, no one wants to buy a condo, so construction starts within the cities of Toronto, Vancouver, etc. are collapsing. So today the market is heavily oversupplied, will be for the next year or two. But because of no construction, what we will be in 3, 4, or 5 years' time, I suspect we'll be in the opposite conditions where apartments might be quite rare. And in that case, Canadian Apartment REIT is very well positioned to benefit from that. They will see some pain, but ultimately trading today on 0.7 times book value, maybe a 25% discount to NAV, long-term growth in apartments and rents, they're very well positioned to take advantage of that.
Thank you very much, Martin. Always great talking to you, and thanks very much indeed.